You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. With me in the studio, Karthik Malhotra as usual. Good morning, Karthik.
Morning, Shweta.
Well, let's begin with the top story that we're tracking at this hour, which is the SEBI markets regulator seem to have finally started its crackdown on Finfluencers. An order here and an order there, but one of the biggest orders that has come in to bar one of the Finfluencers from ever participating in securities market, and that is Baap of Chart, a very famous Finfluencer on YouTube, being followed by millions of people, is now under regulatory hurdle for doling out advice that SEBI feels or believes is, completely off track.
Absolutely. So I think Baap of Chart, the sort of name with which this Finfluencer brand goes, has about 500,000 odd subscribers on YouTube, has about 83,000 subscribers on Twitter, has two accounts that I could spot on Instagram, one with about a little short of 1 lakh odd subscribers, followers, and another one with about 1.2 lakh subscribers. So overall, if you look at numbers across platforms, and these are listed public platforms on which you can see the viewership, you're right, it runs into maybe, early millions. But I think the modus operandi here has largely been Telegram. And Telegram being used as a toolkit of sorts, even for doling out stock market related advice. So SEBI has barred Mohammad Nasir as well as 6 other associates, making it a total of 7 from participating in security markets.
Okay.
Now, I think this comes pretty much in sync with about 2 weeks ago when Madhvi Buch had done this interaction with registered investment advisors and had warned very clearly, without mincing words, that Finfluencers will have to register with SEBI. And I think the line that she had used back then was is something that resonated and stuck, that you cannot have a thappa of public school and take private tuitions. So it's the case here that there is private tuition, so to speak, perhaps by unqualified or at least not registered regulated investment advisors, and these advisors acting perhaps in the interest definitely of themselves, but if not of themselves, then definitely it is acting, to help shareholders or to help, participants into equity markets make money in the process by doling out such courses or by doling out such advices on social media platforms and on messaging platforms like Telegram. These Finfluencers
what are the promises
themselves
that they're making? What are they telling? I mean, what is the problem here?
I mean,
with
see, I don't follow the unregistered, investment advisors. So honestly, I've not seen a single video start to end of any of them. But these somehow, they do pop up once in a while. So I don't think there are promises as such being made, but there are clear-cut courses being offered, courses that will help you become perhaps in your own level Baaps of the charts, so to speak, and gain from that wisdom, gain from that experience, gain from that knowledge to participate in security markets and make money.
All right.
Either for
Only
yourself
they're not
or
registered.
They're not. So Baap of Chart and Mohammad Nasir and the 6 other associates are not registered investment advisors. And that message is coming down very clearly that if you don't register, then you have no business to be doling out advice or offering courses of any kind related to stock markets, security markets, and make money in the process and promise other people to make a living through investing in share markets. And I think that has a larger sort of resonance with the talk at the RIA conference a few weeks back. And now I think what is also emerging from here is that as a precautionary measure and to set some sort of a precedent on cracking down on Finfluencers, SEBI has also asked Baap of Chart to deposit as much as 17 crore rupees in an escrow account.
Okay.
So in an escrow account, pending query, so escrow account typically works that, if there are 2 people holding an escrow account, neither of them can withdraw money from that escrow account without the other person signing off.
Right.
So it's an escrow account where money will be put in by Baap of Charts, 17 crore rupees, and they will get access to that money only after SEBI sort of signs off on the checkbook. So I think making sure that some sort of financial implication, a sort of financial liability is placed on Baap of Charts by holding that money, pending inquiry, pending some sort of action, and that money could then either be used as penalty or could be refunded as the case progresses.
All right. So before we move ahead, what is the big takeaway for retail participants like you and me, or perhaps someone out there who's hoping to make an investment? What is the takeaway from this case? What should they do? What should they not do?
So, I think I'm not an expert on this, but from my limited understanding, Shweta, the message has always been loud and clear. You've got to do your research. You've got to know who you're seeking advice from. You've got to understand the credentials of that professional who's offering that advice to you. And I think rule number one is just look up the SEBI registration number. If the influencer, Finfluencer, expert, analyst is not registered with SEBI, then you are literally, again, to quote Madhvi Butch, you are walking towards a khai. So, and that khai, at best SEBI or these registration numbers at best can warn you that the absence of such registration numbers would not be prudent advice to, risk your life's earnings and savings on. And it's better to be cautious than to be sorry. So I think simple one golden rule, do your research on the person who is doing research and helping you with advice to invest your hard-earned money.
Right.
And if it is not a SEBI-registered investment advisor, then the liability technically is on you. You lose money, there's nobody out there to save you.
All right, I think it's extremely important. A word of caution out there for every person who's hoping to invest. Only go for people who are registered with SEBI. Karthik here does not watch Finfluencers. Be Karthik. Do not go for Finfluencers. But shifting focus now to a story that we've been tracking coming from Adani Group once again, where reports are suggesting that Adani Group auditor Ernst & Young is facing inquiry. What is the inquiry all about?
So, so Shweta, this is again a Bloomberg report, which was released yesterday. It said in the papers today, and it's primarily an NFRA probe. What is the NFRA? NFRA is a National Financial Reporting Authority. So, it is the regulator for auditors. Now, how the auditing business landscape works in India by law, even the big four, including EY, which you mentioned, none of the big four can do any sort of auditing directly. They can't sign off on audited books directly themselves. And they've got to work with members. And these are members that they onboard as trusted, sort of registered members who sign off on audited books of companies that these big four or other large, auditors who are not Indian companies, Indian origin companies, sort of, engage with larger companies to audit their books. So one of the EY members, EY India members, a firm by the name of SR Batliboi, has now been inquired into, scrutinized by NFRA. Now, NFRA, the regulator of auditors, is part of the Ministry of Corporate Affairs. So there is obviously, the sort of linkage with the larger central government and its mandated authority regulator, the NFRA, now scrutinizing books dating back to as far as 2014. And this comes about 10 months after the Hindenburg allegations that came on Adani Group.
Any relation at all to Hindenburg?
So the 2014 case, I think that is when SEBI had originally, under UK Sinha, started the inquiry on stock price manipulation. So, and that is something that Hindenburg picked up on in Jan, and soon thereafter Adani also gave its statement that its books are audited by duly sort of authorized professionals, and at the same time had said that these reports, these allegations of Hindenburg are misappropriated and false, and completely dismissed them. However, given the fact that these are 2014 files and communication material being scrutinized by NFRA, and these are being this information is being held by SR Batliboi, which is a member of EY, which was the sort of on paper auditor of 5 of Adani's listed companies. These include Adani Energy, Green Energy, Adani Ports and SEZ, Adani Wilmar, so a lot of these companies, as well as the cement companies. So 5 of these companies, which contribute to about 50% of Adani Group's total revenue, being scrutinized dating back to 2014. Now, obviously, 2014 being the time when SEBI had originally started its probe on potential stock price manipulation by Adani Group. Now, NFRA coming into the picture and looking at those audited reports and perhaps, seeking some answers from SR Batliboi.
All right. So we don't know what questions are at the moment, but we do know that there is scrutiny on Ernst & Young and specifically Adani Group of companies. Remember, the SEBI report that Karthik was referring to could be tabled in Supreme Court on 30th of October. There have been 2 delays so far where the case has been further suspended, not heard. Could be heard on 30th of October. We may just come across that SEBI report.
In fact, my email to SR Batliboi this morning bounced back. The email ID under the query section of the website of the auditor perhaps is either the mailbox is full or is is not an updated email address. So my email to SR Batliboi seeking a response on this particular Bloomberg report bounced back twice over.
All right.
So let's see where that story
We tried
really takes us.
reaching out to Ernst & Young. We could not get...
Not Ernst & Young. This is the associate member of Ernst & Young.
All right. So associate member of Ernst & Young. We couldn't get a response. We'll update as and when we do get a response. But shifting focus to a story that we're tracking by the way of TCS, it appears that there's also scrutiny on TCS for delays in onboarding new recruits, especially from Maharashtra Labour Ministry.
Absolutely. So I think, we've all seen the kind of headcount challenges that IT companies are facing. We've seen the numbers
about 16,000 for
under
top
pressure.
3, cut down in the quarter 2 of financial year 24.
Exactly. So I think the headcount is under pressure. This pressure emerging from overall financials, Q2 results, sort of, not really beating street expectations, a very tepid sort of Q2 earnings, and reports also coming that FY25 could also pretty much be a washout year for, for IT firms. And at a time like this, when TCS has just sort of emerged from the bribe for jobs scandal, so to speak, in which it has also fired its, the head of this body, the recruitment sort of, cross-functional recruitment organization, inter-organization body, which attributes resources to particular projects. So I think it comes at a time when, in any case, there are so many pressures, and some pressures that the IT companies in general, TCS in particular, is emerging out of, but then not really standing up to the offers it has made, in fact, cancelling or withdrawing offer letters. And this has been noticed by the Labour Ministry in Maharashtra, and I think a notice has been sent to TCS to sort of respond to this.
All right. So TCS not the only company which is facing the heat, come to think of it. You briefly touched on the reduction in headcount, at least for the bellwether IT companies, to the tune of 16,000 employees in the second quarter financial year 24 itself. In a sense, pointing to a trend where there is a pause on hiring and there is an extra firing activity which is happening on a monthly basis.
So whether this is firing or whether this is quiet quitting, we don't really know yet. So I think
because the attrition rate is also constant.
The attrition rate is constant, right? So are people really resisting the working back from office? Are people, employees, really resisting going to office formally dressed when you've been pretty much in the comfort/discomfort, but this acclimatization of your known surrounding called your home for the last 3 years, and now returning to office, the pressures in any case with dwindling financials and with revenue being in question always. So there are added pressures. There is this return to office, don't work from home anymore, dress up for office, travel the distance from office, maybe return from your hometown and come back from your Janam Bhumi to your Karam Bhumi. Seeing some sort of a resistance from employees, which is then through this quiet quitting stroke, mass layoffs, etc., adding more pressure on those who are there. And in the light of this, numbers not adding up, offer letters rolled out, getting recalled, getting cancelled. So overall, I think, even the IT bigwigs are at this moment perhaps treading with a little bit of caution, because we know US bond yields have crossed the threshold of 5%, and that is a sentimental sort of notional assumption that money is going to flow out of Indian markets and is going to flow into US Treasury bonds. If that happens, with bonds yielding more, discretionary spending in US, in Europe will take a further hit, and that could further dampen the earnings of Indian IT companies. So I think IT companies are also treading with caution, and employees, much like anything else right now, at some level could be construed as collateral damage in this wait and watch sort of a phenomenon.
It wouldn't be wrong to say IT firms are facing the heat at the moment,
Absolutely,
or perhaps bracing for a difficult time.
And IT companies facing the heat is pretty much significant of India facing the heat because we are a services-driven economy, not yet a manufacturing-driven economy. So service sector, IT majors taking a beating is pretty much being taken by India on its chin when it comes to our own growth.
All right, we'll of course keep tracking those details, but moving on for now to a story we're tracking by the way of online gaming companies. Online gaming companies as well continue to face the tax heat. Reports now suggest in media, not confirmed by GST authority, that GST notices worth 1 lakh crore rupees, 1 trillion rupees has been sent out to all online gaming platforms so far. 1 lakh crore, I mean, you know, one of the questions in my mind was, is this even the market cap of online gaming companies?
No, I think you're right. Valid question, because we've noticed in the past also, I think it was Delta Corp or one of the online gamings, Delta Corp only, right, where the tax notice was about 3 times or 4 times the market valuation of the company. So, and I think what is important to note here is that this 1 lakh crore rupees is actually a slap slapped on the 2018 financial year, FY18. And 5 years have passed since then. So if this is the notice, 1 lakh crore rupees of tax not paid 5 years ago, look at the kind of notices that are forthcoming likely for FY19, FY20, FY21, FY22, FY23, and we are already in FY24. So yeah, I think by any logical sort of estimation, there have been only more number of gamers taking on to gaming platforms in the last 5 years, 6 years. So if this is the kind of tax evasion, so to speak, which the government is saying was a clarification that, and the government in the 50th GST Council and thereby later in the 51st GST Council meeting also clearly mentioned that it's not a change in the 28% tax rule. It is just a clarification that game of skill and game of chance, which means online gaming, which may involve some degree of skill, will be taxed in the same manner as a casino or horse racing, which requires no skill at all. So the government, GST Council, they're saying that it's a clarification and it's not really a change. And hence, will this tax be retrospective or not? We don't know. So I think just one final point that the GamesCraft petition against a 20,000 crore rupee plus tax notice by GST authorities was actually quashed by Karnataka High Court last year. Now this matter was appealed by the GST tax collection DGGI, Director General of GST tax collection authority, in the Supreme Court. Supreme Court had earlier quashed the Karnataka High Court order. GamesCraft then sort of put in its own petition. So Supreme Court right now had stayed the Karnataka High Court order, which had ruled in favor of gaming companies, and Supreme Court is saying that cannot be the precedent, and we'll have to wait for Supreme Court to have at least one verdict in the GamesCraft saga, which could then be a precedent for all other gaming companies which are facing this tax notice right now. So
1 lakh crore for 2018, and that is financial year 2018. We are in financial year 2024. So into 4, if every variable remains constant, is 5 lakh crore. Can online gaming companies pay that much? We don't think so. They're already challenging. They're already going under. Many of them are winding up operations. There's going to be a huge tax axe on online gaming platforms. Will they survive? Won't they survive? We'll keep bringing all those details right here on News 9. But with that, it's a wrap. Thank you very much for watching.